Glenn Mumford, the Australian economy appears to be on the growth path again, which raises the spectre of inflation. In your opinion, where is inflation heading, and is it a concern for investors?
To be honest, at the moment, I think from the broader market perspective, it's deflation that's more of a worry. I mean, from an Australian markets orientation, inflation isn't an issue. I mean, it's falling very much within the bounds of RBA targets. But if we look across to the US and Europe in particular, we're actually seeing inflation rates tracking, certainly coming back and actually risking in some cases moving into the deflationary sphere. And that I think is a real worry.
Where do you see the weaknesses in the Australian economy?
Weaknesses, I mean, to be honest, I think the biggest potential weakness is complacency, because, you know, we have come through this last 18 months remarkably well. I think in fairness, the government's done a reasonably good job in terms of stimulating early, and I think the Reserve Bank, in terms of responding aggressively to rate cuts last year, handled it remarkably well. The problem, though, is that we're actually getting some numbers coming through now that are making not just the broader economy feel complacent, but I think the monetary authorities and the government. We've had obviously the first signs of an easing of accommodation from the RBA, and we've heard noises over the weekend that the government may be looking at taking some of the stimulus out of the system, and I think that would be dangerous.
Glenn, you've said in your column that you're becoming very concerned about Australian bank shares and that they're between 10 and 20% overpriced. Can you explain your reasoning? Yeah,
I think the issue, as much as anything else, is that the Australian banks performed remarkably well through the last 18 months to 2 years. And as a result, they actually led the broader equities recovery we've seen over the last 6 to 7 months. You know, the big four banks have actually jumped between 80 and 120%, which has been a very good recovery. The problem is it's actually taken a lot of the value out of the equation. We're now sitting at levels that are fair to fully valued. And that creates, I think, a bit of a problem going forward. The other issue we've got is that from a global perspective, we're seeing a push towards increasing the regulatory restraints on banking, and that'll see capital adequacy requirements working against the big banks. I don't think that's been fully factored into market pricing at the moment. I think there's an appreciation creeping in, and that's why we've actually come back now. Since I wrote that piece, we're back now about 10%. So we've probably booked about half of those declines that we probably need to see.
Where do you see the opportunities for investors in 2010?
I think the Australian economy is well positioned if we are going to see a broader global recovery, and I think we will. The equity market isn't overpriced. It probably needs to come back a little bit, but over the next 2 to 3 months, we are going to see positive earnings revisions, which are going to help trigger upside on valuations going through to 2010. China is going to offer a lot of support for this broader market. We are going to see good growth figures coming through there, 8.5%, 9% continuing next year and the year after. And I think Australia's in a position to leverage off the back of that. So I'm reasonably comfortable with the outlook.